Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Hello and welcome to the show. This is Andy Webb with Lifestyles Unlimited, and as always, we're working on your financial freedom. Hey, I don't know about you, but I've had enough of all the negative press lately. You know, I read a ton of news and articles about the economy and all the stuff going on in the world to help me prepare for the show. And really, I like to keep up with the economy in general, at the national level, of course, and especially here locally. I'm in Dallas-Fort Worth. As an active investor and as a landlord, it's important to keep informed and stay up on those developments. But man, I'll tell you, I got to take a break from yield curves. I mean, that thing, it just inverted again last week. It corrected, and the 10 and 2 just flipped once more. I got to take a break from China and trade wars and just all the market volatility that we've been seeing out there. It's there. I read about it. But, I mean, heck, the markets just tanked again on Friday. They're down another 600 plus points, the Dow. And who knows what's going to come out of the latest G7 summit that's going on over in France. And stay tuned, right? 2020 election, that thing's going to start to heat up anytime now. So, look, today I want to take a more positive focus and get away from the news of the day. And look, we talk on this show about financial freedom, and we talk on this show about getting to that financial freedom through passive income, which we build up by investing, of course, in rental real estate. And that can be, your vehicle of choice, single family houses. That might be small multifamily or even large apartments or some mix of the above, right? Financial freedom. And we say it all the time on this program. What we're doing here is not about the money. It's about the lifestyle. That's our tagline at the end of the show typically, right? Look, we are creating a lifestyle for ourselves. Now I acknowledge that, yes, it is the money that allows the lifestyle, no doubt about it. But more importantly, it's how we go about putting that money, that cash flow into place that really allows for the lifestyle. Look, passive income will trump your earned income from a job or if you're self-employed and any day of the week. And passive income from real estate will trump all other forms of passive income, hands down. I mean, what other investment vehicle makes you money 5 ways? Now, if you're a new listener to the program, we'll talk about that briefly just here in a second. I want to bring you up to speed when I say 5 ways that you make money, but I want to focus on something else that happens when you start buying rental real estate. And if you've been investing for a while now, you'll know what I'm talking about. So look, I'm personally, my wife and I, we are single family investors. That's what we do. And what I'm going to tell you today, I've experienced firsthand. And moreover, I've seen it in my fellow investors as they develop and grow and continue down the same path as we. So let me take a step back. I want to tell you something. I remember my mentor at Lifestyles Unlimited saying years ago when we were just getting started, we joined a little over 7 years ago. And if you've been listening to the show for any length of time, then I'm sure you've heard Lynn Murrow. She's hosted the show in the past. Well, back when my wife and I got started, again, 7 years ago, Lynn was our single family mentor. And I remember she made a reference at one point when talking about buying and fixing up single family houses. She said, it's like having a bag of potato chips in front of you. Do you remember the old Lay's potato chip commercials? Bet you can't eat just one, right? No one can eat just one. Well, Lynn said, and very much correctly, that single family houses, they're just like that bag of potato chips. Once you buy and fix up one, you just want to keep on going. You can't stop. It becomes addicting almost. No one can eat just one. It's like a drug, which is why I personally do not buy potato chips, by the way, because I can't help myself. And let me tell you, like any drug, there are side effects. And I'm serious here. There are side effects when you start buying these houses or apartments or both. You will start to notice changes in yourself that you probably did not expect just from buying a few houses or getting into a few apartment deals. So that's what we're going to talk about and take a look at today are these side effects, right? Now, for the new listener, I do want to quickly underscore why we use real estate as our tool for achieving financial freedom. This is the money part, right? We do need that. Real estate it's a tremendously powerful investment vehicle. Like I said, we make money 5 ways with rental real estate. And let's just take a quick look at those to bring everyone up to speed. Number 1, cash flow, right? That's the money we put in our pocket each month from our rental properties. This is what funds our lifestyle. Cash flow is what's left after we collect our rent each month on however many houses and pay the expenses associated with those houses or apartments. Here in DFW right now, by the way, we're seeing anywhere from $200 up to $500 a month in cash flow. On average, $400. We just finished a deal over north of Fort Worth that's a little bit above $400. So I'm seeing the same thing in San Antonio. I'm seeing the same thing in Houston. So that's cash flow, money at the end of each month that we're retaining. That's our profit. Number 2, equity buildup. Here's the thing. Every month, a portion of that rent from the tenant is going towards paying down the mortgage. Now, when you initially put a mortgage on a property in the value range that we're buying at, it's usually somewhere between maybe $100 to $200 that you're paying down each month initially, but that's going to grow. And it's great because somebody else is paying that mortgage for us, and we're building up our equity in the property. I mean, that's wealth creation right there. And speaking of equity, number 3, when you follow the Lifestyles model, when you buy houses at a discount, which we do, usually because they need repairs, right? We're able to go in, get those renovations done at a great rate using contractors and whatnot from our Lifestyles vendor list, and we create value. That's equity capture. That's the value we create above and beyond our purchase and rehab costs when we initially take that deal down. Of course, appreciation, number 4, I'll tell you, we've seen a ton of this in our Texas markets in the past few years. And remember, real estate doubles in value every 20 years. You're going to see some growth in value on your properties. Absolutely. And finally, number 5, the tax advantages. I'm not going to go into the details here. It's pretty complicated, but there are many ways that the tax code favors real estate investors. Hey, let me tell you, if you've got a question, we're going to head into a break. You can email me at askandy@luinc.com. That's askandy@luinc.com. This is a live show, so feel free to give me a call in the studio at 877-711-5211. Again, the studio number here is 877-711-5211. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show. This is Andy Webb, and if you want to know more about Lifestyles Unlimited, go to www.lifestylesunlimited.com, and you can register there for our free workshop. In a moment, we'll return, and we'll talk about those side effects that you're going to experience when you start buying rental real estate. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show. This is Andy Webb, and I'm happy to be with you today. And today we're going to talk about some of the side effects that you're going to experience when you start to invest in rental real estate, whether it's single family or multifamily. We're not talking about the cash side of it. We hit that a little bit ahead of the break, and I think the guy in the commercial probably talked through the 5 ways we make money as well. So I want to look at some of the other things that you will experience that are maybe non-financial, let's say. Things you probably wouldn't think about before you start investing, but things that I find really add value that have really enriched our lives and things that I see in my fellow investors. Now, before we dive into that, we do have a call. I have Jewel on the line from Forney, Texas. Forney is just a little bit east of Dallas. Hi, Jewel. How are you?
I'm good, sir. How are you?
I'm great. What can I help you with?
So my parents are set to retire out of the country where their retirement money will go a long way due to conversion dollars, but they're set to leave me their house, which is on a 30-year mortgage, and I think has a little over $120K left on it. I have zero experience on rental properties, and I have my own mortgage payments. I don't know if I should sell that house when it gets there or turn it into a rental.
Well, here's what I would recommend that you do. You need to look at your numbers first of all, and make sure it makes sense, right? As a rental, you have to look at. You said it's already on a 30-year mortgage. I'm not sure how that transfer to you works. If you have to if you're able to assume it, or if you're going to have to put your own mortgage onto that. So you'll need to look at what your end payment is. Look at the property taxes in the area as well as the insurance rates. Those are your base your base fixed costs that you're going to see from month to month, and then look at the rents and see what's the spread there. Does it, what do you want to see? What do you need to see to be comfortable, to make it worth your while? Is it a net cash flow of $400, $500? What is that number? Figure that out. And that'll tell you, does it make sense as a rental? And you can do the same thing. Look at the equity there to see if it makes sense to just go ahead and sell it and cash it out now. We talked on an earlier show about some of the risk that we're seeing out there with interest rate, well, not interest rates, with the bond curve flipping on its head and the stock market's going a little nuts, and it might make sense to have some cash on the side. So I would do that analysis. And if you're not sure how to do that, you can reach out, find someone in your area. You're in Forney, so you're just a little bit east of Dallas. I would strongly encourage you, if you haven't checked us out already, to come out to one of the free workshops that we do. Let me see here. We've got one in Dallas, in fact, coming up on Thursday, this coming week on the 29th. There's no cost. It's a free workshop. The guy that's teaching it, John, he's both a single family and a multifamily investor. He joined Lifestyles, I think, about 5 years ago, retired in 2.5. So he's got a lot of experience. So he could probably give you, a little bit of tips and tricks. And what they'll do at that workshop, among other things, is dive into some of the numbers that drive a single family investment and drive a multifamily investment. So you can see that actually on paper or on the whiteboard, or I'm not sure how he's doing it right now, but that'll help you maybe settle your head around that a little bit better. But yeah, look at the numbers and see what makes sense for you and what you're comfortable with.
Awesome. Sounds good.
All right.
Thank you.
I appreciate the call, Joel. So we were talking ahead of the break about the ways we make money, and my thesis today simply is, and we say this all the time on the show, it's not about the money, it's about the lifestyle. Now, the money funds the lifestyle, of course, but what I've seen over time is that there are other things that we benefit from with this investing thing that we do. And I'm going to talk about some of those side effects. And first and foremost, now you may or may not be a homeowner. I have a lot of investor friends that are actually renters. They rent condos, they rent apartments, whatever. They like the flexibility, so they can up and move to another city if they like, live where you want, invest where you want. That's what our lifestyles model allows you to do. So for them, this may not be so much of a topic of interest, but if you're like me, you own your own home. And what I've found over time is that, houses they're pretty simple beasts to understand, really. I'm not an electrician. I don't like to get into that stuff so much. I'm not an HVAC guy, but most of the other stuff, simple stuff, I can handle on my own and troubleshoot and whatnot. And I found that being an investor in rental real estate and single family houses in particular has made me a better homeowner. Look, Robert Kiyosaki, that's one of the books that a lot of folks read that get started, kind of directs them down the path towards rental real estate. He wrote a book years ago called Rich Dad, Poor Dad. And in that book, he talks about your personal house as a liability. And he calls it that. It's not an asset. A lot of people call it their biggest investment. It's not. It's not an asset. It's taking money out of your pocket every month. And what we want to do is operate that liability as efficiently as we can. And again, I find as an experienced landlord and somebody that manages rental houses, I've learned to do that a lot better. Plus, being a Lifestyles member has an added benefit that we've got access to the vendor list. We had to lift our foundation on the west side of our house a little later in the year last year. I think it was around 14 piers or so, and we naturally reached out to a number of the foundation companies on the vendor list, got a number of bids, as we always would, and picked one of those guys, and we got great rates, because we were part of the investor network. We've done business with every one of these companies over the years, a number of projects every time, so they're happy to work with us. We're happy to work with them, and that sort of thing happens quite a bit. The AC guy that we use is also off the vendor list. And I'll tell you what, it doesn't only make us better homeowners, but I think it makes us better neighbors. We have a lot of questions from neighbors that know what we do. They know the industry that we're operating in, and we're able to help them as well. And I do enjoy that and helping them. In fact, my sister lives all the way on the west coast of Florida. We talk a lot more because she's in a house, and she, again, knows what I do, and typically will call me to ask for tips and tricks and advice. And typically my advice is, here's who I call when I have that problem with the garage door opener, or this guy for plumbing, whatever. But I can troubleshoot with her and give her a little bit of direction. And I'll tell you, if you do self-manage like we do, we self-manage our single family portfolio, you get really good at troubleshooting, because you don't want to always send a repair guy out every time the tenant emails you with some sort of problem. So you learn to diagnose these things remotely. And again, that's just comes back to you as the homeowner as well. Something else that I've noticed, and this is going to depend on how you invest. So I see at Lifestyles Unlimited in particular, there are a lot of husband and wife teams. Now, there are a lot of guys that come in by themselves or ladies that come in by themselves. The husband's just not interested in that investment thing that his wife is doing, or vice versa. The wife's not so interested in what her husband's doing. In fact, John will probably talk about that at his free workshop, because he's the heavy hitter of the family, and his wife is more than happy to let him do his thing. She's got her own stuff going on, and that's great. But if you're like myself and my wife, or any number of couples that I see at Lifestyles, Brian and Meredith, are a couple that come to mind that are lead investors on multifamily, and they're doing great, and they're doing it together, and we're doing it together. And you really become a stronger team, in a sense, with your husband and wife, a power team of sorts, I guess you could say. You learn to leverage each other's skills. You're spending a lot of time in this business together. It becomes a family business, and you build a stronger relationship. That's what I really see, is we're together a lot. I really enjoyed working through the newest project with my wife, figuring out what we're going to do. Do we even want to buy it? That sort of thing. And it just really built a wonderful, strengthened our relationship, I would say. So we're going to head into a break, and when we come back, I really want to hit a topic that I think you'll find compelling. Now, if you do have any questions for me, you are welcome to give me a call at 877-711-5211, like Jewel did. That number here in the studio, it is 877-711-5211. Or if you're feeling shy today, I understand that. You can email me at askandy@luinc.com. Again, that email is askandy@luinc.com. And we'll wrap up where we'll take a look at this couple of pretty important topics, I think, when the Lifestyles Unlimited Real Estate Investor Radio Show continues here in just a second.
All right.
We are back with the Lifestyles Unlimited Real Estate Investor Radio Show. This is Andy Webb, and today we've been working on your financial freedom by actually talking about some of the side effects, some of the other benefits that you'll take away from becoming a rental real estate investor. And I want to jump into the next one, which is, for me, and I see this with a lot of guys, just feeling a stronger sense of community. And that's across the board in a couple of different aspects, really. Now, obviously, for those that are Lifestyles members like myself, the Lifestyles network is huge. There are somewhere around 40,000 members, not just nationwide, not just in Texas, but around the globe now. And there's a real presence there. And I really personally enjoy, and I see this with everyone else, getting together at every month there's a case study. Occasionally I'll go check out the free workshop and talk with the presenters, or they're the single family road trips or the multifamily road trips. It's just really a great community. And the thing is, I'm kind of a shy guy. You may not guess that, but I am. And to go into a room full of people, it makes me a little nervous sometimes. But I know when I go into that room with other Lifestyles members, we're all on the same wavelength. So there's nothing to be, nervous about there, I guess. So I feel comfortable, and we help each other out. We exchange stories. We seek information as we need it. We seek help. Obviously, we can work with the Lifestyles mentors and realty team, but I find that community itself, it's just a great infrastructure, and that extends outward. As I really have enjoyed at a number of the recent case studies when the multifamily presenters have been up there. They've talked about some of the things that they've done outside of their investing itself. Right? We always look at the numbers, which is very educational to see the returns that we're getting, the money invested, that sort of thing, the length of the hold, how much they got out when they refinanced or when they sold, and so on. Very inspirational stuff, I'll tell you that. But a lot of these guys are out there doing stuff in their community, whether it's that apartment community itself or within the city where they're invested. And there was one guy that presented recently, I guess it was at the last case study, in fact, and he wanted to do something for his residents. So he reached out to, number one, the vendors that he's affiliated with that have worked with him, and number two, his investors as well, and said, hey, let's do something for the school kids. They're headed back to school. I guess they're probably already in school now. I have a 2-year-old, so we're not quite there. But what he wound up doing is getting a bunch of donations, backpacks and school supplies to fill those backpacks, and gave those out to the kids, to the school kids, which was a wonderful thing. funding. And then with some of the leftover funding that they had, they got together a number of gift cards and donated those to the school. We all know, I see it all the time. Teachers are underfunded, and my wife used to be a teacher, and it's kind of tough. It's kind of a tough job. I really respect those people, but the teachers out there, but they need some help. And this guy was able, he was able to deliver. So you're inherently involved in these communities with your rental property. So why not be a part of it? And most people do step up, and I just think that's a great virtual circle or virtual cycle that really starts to propagate itself. And what we're talking about here as well is giving back, and that's part of the Lifestyles philosophy, is that as you develop, you do become, you get to a spot where you can give back, and I see that all the time as well. People become more generous. Now, I was reading a book recently by Gene Simmons. Yes, the Gene Simmons of KISS. The book was titled On Power. Very short book, very, very quick read, and a very good read. I would highly recommend it. I picked it up at my local library. But he gave an example of the airline oxygen mask. And what he said is, look, when the pressure in the cabin drops, you don't take that mask and put it on your kid first or on the guy sitting next to you first, do you? No, you take care of yourself first and foremost, because then you're going to be able to help others. And I will tell you this, I hear the story now and again about the guy that gave away his last dollar to the guy on the street or whatever. Well, now they're both in need. That doesn't help. What I want to see you do is get your investments going, get your passive income going. And what you're going to find is you got a lot more money to work with. You got a lot more time to work with, especially if you're fully retired from your day job. Right? So take care of yourself, get that stuff built up, and you'll really be able to help out others. And I want to take this opportunity. Lifestyles doesn't normally use this platform, this radio platform, to promote donations or anything like that. But I do want to tell you a little bit about a member of ours out in Arizona. He's in Phoenix. His name is Peter Neerman. And if you happen to make it down to the Lifestyles Wealth and Passive Income Expo this past April in Houston, he was the keynote speaker there. He gave a very inspirational speech, and it's out there on YouTube. You can find that. I'll tell you how to find that. In fact, it's worth listening to. I think you'll find some inspiration there. But Peter's he's out in Phoenix, out in Arizona, and he's one of our ambassadors there. So if you're in Texas like I am, you've got an office near you. If you're in Houston, San Antonio, Austin, or Dallas, right? We've got an actual physical office that we can go to. We didn't have one of those in Phoenix, and we've got a number of what are called ambassadors around the country. Friends of ours that moved from Dallas, they're now near Orlando. They are ambassadors in Florida, for example. So what happens is if there are new members that join outside the state, they can reach out to these ambassadors for help, right? They can talk, they set up networking events and so on, and start to build that community. Right, I talked about that Lifestyles community earlier. They start to build that community in that city or town where they are. And Peter, he's done such a great job of that. He's really helped build up the membership base there to such a point that Lifestyles is actually opening an office in Phoenix. So that's awesome. That's great. And this guy, he's invested in single family houses. He's invested in some multifamily. But the part that's interesting about Peter is he suffered a pretty big tragedy, I would say, a number of years ago. He was a healthy guy, bodybuilder, vacationing with his family, his 3 kids and his wife in I believe it was in Hawaii, and a rogue wave picked him up, right? Calm day. Everything seemed pretty copacetic. This wave comes along, picks him up, smashes him down on the beach, and snaps his neck, right? But he didn't die. He pulled through it. He got into the intensive care, and a lot of people were kind of giving up hope on him. He had tubes going in for breathing, for eating, and so on. Couldn't move any of his limbs. He was a quadriplegic at that point, but he buckled down and said, you know what, this is not it. This is not the end. This is not how my story ends. I'm going to do something about this. And he fought. He no longer has a breathing tube. He no longer has a feeding tube, and he has use, some, limited range, but some use of both his hands now. And it's gotten to the point where, because of that ability to steer himself around, I guess, he's able to drive. Right, he had a van that was retrofitted to allow his wheelchair access, and he could drive. In fact, growing up where I grew up, one of my neighbors had a similar setup, and I remember as a teenager, I was looking at him and thinking, "Man, how is that guy driving that van?" I'd see him wheel out. But anyhow, after hearing more about Peter's story, I guess I understand it as a grown guy now a little bit better. But here's what's happened, and it's very unfortunate. This guy that's dealt with so much and really pulled himself up. He joined Lifestyles after all of this stuff happened to him, and really achieved his own freedom, his own financial freedom, by doing exactly what we talk about here on the show and at the free workshops and at the case studies and at the 2-day. He really achieved his freedom. But very recently he had another tragedy, and unfortunately his van that I just talked about, the darn thing caught fire. And it caught fire massively. I saw some pictures. That thing is just burned to a crisp. It's gone. So we are doing something here at Lifestyles Unlimited, again, that we don't typically do on the show, and we have a fundraiser. David Fisher, if you've been around at all, you know he's one of our presenters at the 2-day workshop. He's got a fundraiser out there on Facebook. The goal is to raise $100,000 for Peter. That's going to cover the cost of both the van and all of the equipment that goes in to outfit this van so somebody in his condition can drive it. Peter didn't ask for this help. He wouldn't ask for this help, but we're offering this help, and I'm very proud to say that already in the first 7 days we've raised over $28,000, so more than a quarter of the goal. Now, if you want to donate, whatever you have, a couple bucks, that helps. You can go to the following website. It's LU Give Back, LU as in Lifestyles Unlimited, lugiveback.com, and that's going to redirect you to David Fisher's Facebook page, and you can donate through that platform. That is the only place. We've heard rumors already that there are various scams out there, so that's the only place that you're going to want to do that, okay? So again, that's lugiveback.com. Help us reach that goal and get Peter up and running again. He's been doing a phenomenal job for us out there in Phoenix, Arizona. Like I said, we're opening an office up there real soon. So, hey, if you've got any questions for me, you can give me a call. The number here is 877-711-5211. Again, that number is 877-711-5211. And if you're too shy today, give me an email at askandy@luinc.com. Again, that's askandy@luinc.com. I do check those on the break, and I'll answer those on the air if I can. And when we continue with the Lifestyles Unlimited Real Estate Investor Radio Show, I want to talk to you about two other topics. Number one, confidence, and I want to talk to you about entrepreneurship. Do you need it to become a real estate investor? I'll tell you no, but I'll tell you what will happen when you become an investor when we continue. We are back with the Lifestyles Unlimited Real Estate Investor Radio Show. This is Andy Webb, and today we've been talking about some of the side effects that you will experience when you start buying rental real estate. And that doesn't matter if you're a passive investor in multifamily or a buyer of single-family houses like my wife and I, or maybe you're doing multifamily deals as a lead. You'll feel some or maybe all of these side effects that I'm talking about today. And I'll tell you one thing that you will absolutely experience, and it's kind of a roller coaster, right? You're going to feel some highs and you're going to feel some lows, but ultimately you're going to find yourself back up at the top of that mountain when all is said and done. And what I'm talking about is your confidence. And I see it all the time. Folks have a real hard time getting started buying real estate. It's a scary prospect. I was there a little over 7 years ago. I guess it was, I think, back when we bought our first house, and it took us a very long time to get to that point. We had joined Lifestyles. We drug our feet. It took us a while to pull the trigger on that thing because we were just nervous. We continued to build our education and better understand what we were getting into. And, the roadmap was there. It was very clear, but we just had our own hurdles that we needed to get over. And that's kind of the low that I'm talking about. You start to go down further and further on that roller coaster ride, but eventually you pull the trigger, just like we did. And, you go in, you buy this house, you fix it up, you take this ugly thing and you make it really shine, and you get it rented in no time because you've put the best product on the market for the best price. And you look back and you're like, wow, that wasn't so hard. Why was I so scared? And it got rented in no time. That's a big fear for a lot of people. It's not even the buying and the fixing part. It's the, will I get it rented? You'll get it rented. I mean, in this market today, don't worry about it. You will get it rented. But that's what happens. You get nervous. You start to hit this trough, but then you start to swing around. The house gets fixed up. It looks great, and you feel great about it, and you should be proud. You're part of the club now. You are a real estate investor now. And that's a great feeling. And that brings with it, I think, I have found in myself, and I see it in others, an increased sense of confidence. And that's just one house. And here's what's going to happen. We talked earlier in the show, right? It's like eating a bag of potato chips. You're not going to stop with just one. You're going to want to keep going. In a few months or a few years later, depends on your, what you're working with, whatever your timeline is, you're going to look back and you're going to think, holy cow, I've got 5 rental houses, or 10 or 20. And I'm telling you, that is tremendous, and it is a huge confidence builder. I see, I'm not talking about big egos. We're still very much a humble group, I would say, and I see that as well when I go to the Lifestyles events. But people handle themselves a lot more confidently once they've gotten through that first house and on to the second and the third. And I mean, these are all little projects that you have successfully managed through. And maybe if you're like me, you're self-managing your portfolio, you're still managing through the process. And, you have every reason to look back and to be proud of that. And it is, I think, a tremendous confidence builder. And that's one of the things that drives me crazy. I can remember when we joined, there was a couple that joined at the same time, and they continued to come out to the events I think it was for years. We continued, my wife and I, to progress, and there was this couple, and there they were. They'd come to the single family road trips. They're just about to buy that next house, and it kind of dragged on for quite a while. The couple, it was a husband and wife team, and they were clearly getting frustrated with each other. But then all of a sudden, next time I talked to them, they had done it. They had bought a house, and not only had they bought one, they'd bought three. And they were just humming. They were happy as could be. They'd put the roadmap into place finally, and that's what I love to see. So if you do join Lifestyles, you gotta take action. Okay, simply joining, that is the first step, but you need to take action, and you need to follow that roadmap and actually get out there and do these things. And again, you'll feel a tremendous sense of confidence, and you should be proud of yourself when you're done. And I'll tell you, look, I'm a pretty shy, quiet guy. If you see me out in the street, I may or may not talk to you. I may look the other way. And if you had told me 10 years ago that I would be sitting here on the radio in 2019, I would have looked at you very much cross-eyed and like a crazy person that you are. But here I am. The whole process of getting into rental real estate, it really is life-changing. So I want you to look at that. I want you to think about that. And I want you to get started down that road, because it's not just the financial aspect that we're talking about today. It's all of these sundry benefits that you will receive when you start to get involved. And let's talk about the next one. This is kind of maybe a little counterintuitive. If you are if you do self-manage your properties, this is a people business, right? Well, if you're self-managing, you're going to be finding those tenants, you're going to be putting them into the house. And what I find over time is that you're going to develop a pretty thick skin, right? I know when we started out, and I've got a friend I was talking with about this just the other day in preparing for the show, and we were kind of comparing. He's been doing it for a while. And we were just comparing notes. And I know when we started out, both of us, we'd be like, I'm getting these emails from this tenant. I don't know what to do. Well, number one, we were both part of Lifestyles. We had options there. Obviously, reach out to the mentors, which we did eventually. But what we both noticed is that over time, you learn to deal with these folks. And 9 times out of 10, it's the residents that we have in place are great. Most of them have been there for pretty long, long periods of time. But it is a people business, and you do have to learn how to manage people and how to deal with them. And again, what I have found is that over time you do develop a bit of a thicker skin, because you got that tenant that just doesn't seem to know how to change a light bulb. Well, you'll learn to manage through that. You'll learn how to say, look, buddy, you don't need to be emailing me at 2:00 in the morning about your light bulb. You need to take care of it. That's just an extreme example. I've never experienced that personally, but from what I hear, I guess it's a possibility. But you will build that thicker skin, and that's great. I think that will help you through life. And I want to talk to you about one other thing. I think this is a misconception out there for people that are thinking about getting started. And I hear this sometimes. They say, well, I'm just not that entrepreneurial. Look, there's this thing going on in our society right now where entrepreneurship is largely worshipped. And I mean, that's great if you want to get out there and build a business and such. But what we're doing at Lifestyles Unlimited, it doesn't require you to have an entrepreneurial bone in your body, because what we're doing is following the roadmap that someone else has sent back for us or to us, somebody that has already done all of these things that we're talking about and has seen success. That's Del Walmsley. That's the mentors at Lifestyles Unlimited. That's me. That's everyone that you talk to that's within the organization. And you just need to learn to follow the steps and don't reinvent the wheel, But what I do want to tell you is that's kind of my preface. You don't have to be an entrepreneur to become a real estate investor, but I find that there is this kind of impact, and you do discover over time that, lo and behold, even though you sat at your day job or, your JOB for 20 years, 30 years, however long it was or is, just doing the same thing day in, day out from 9 to 5, clocking in, clocking out. There's nothing entrepreneurial there. You'll find that when you start to build this rental portfolio, you actually do have a bit of an entrepreneurial bone in your body after all. You'll start to think a little differently, And again, a couple points here. Number one, you don't have to reinvent the wheel. Get started, follow a successful mentor, follow what they tell you, and you'll start to go down the path. You'll start to follow the right steps. But over time, you'll discover that there's a little bit more to your life. There's a little bit more out there. And I've noticed that in many of my fellow investors, they do discover that entrepreneurial spirit within. Again, these are folks that spent years or even decades working in corporate America. No sign of the entrepreneur to be seen, but they start down that path and something ignites within them. I've seen guys go on to build their own construction companies, roofing companies. One guy I know, Rusty, he's shifted fully into real estate on the realtor side. That's all he does now, and he's doing great at it. I know another guy that opened a restaurant. I mean, these are people that were working, your regular day job before, and they found that entrepreneurial spirit, was within them, right? And they were able to do a number of things. Number one, they built that passive income. And over time, they were able to free themselves from that corporate job, and that gave them time. And with that time, they were able to explore, they were able to discover. And it's when you go out on these trips of exploration or whatever, you're going to come back having learned something. I'm not talking about a physical trip necessarily. That may be involved as well. Travel certainly opens your horizons, but you're going to discover things about yourself, about the world, and that will lead you down an entirely different route that you may not have expected. And we see this all the time as well. Like I said, I'm a single family guy, and I've noticed a lot of my peers over the years, they start with single family because they've got some kind of, multifamily just seems too big. But what happens is they get good at single family. Maybe it's just a couple of deals that they've done, and then they realize, this lifestyles thing that I joined, it does work. It worked great on the single family side, so now I'm going to dip my toes in the water and give the multifamily side a try. Maybe they just join as passives initially, but eventually a lot of these guys go on to become lead investors or independent rental owners of small complexes themselves, and they're great at it, right? They're great at it. They recognize again that what worked for me on single family, following that lifestyles model, works on multifamily as well, and they shift and become that lead investor, and it's great. It's really great to watch the development that we see there, and of course, as you buy back your time, you've got time for yourself, right? You can get a lot healthier. A buddy of mine finally got out of his day job. He was starting to get a little round in the middle, right? A little beer belly going on there. I don't know, donuts, something like that. And he started working out, and he's trim now. He's trim. He's got a lot more energy than he had before because he's got time for himself. He's got a lot more time for his family, and he's got a lot more time for, traveling for his kids, and he's just doing great. So look, we say it on the show all the time. It's all about the lifestyle. Real estate is simply the tool to help us create the passive income that we need to build and to create that lifestyle. But the cool thing that, I've seen over the years is that you get a lot more out of investing in real estate than just the cash flow. You will become a better person, a more confident person with better relationships. Look, Peter Neerman, I mentioned him earlier. He summed it up best in a post he put on David Fisher's fundraising page out on Facebook. He wrote, "I joined Lifestyles to learn how to invest. I ended up with an incredible network of friends and family. I don't think there's any way I could have comprehended the truth in the saying, it's not about the money, it's about the lifestyle." So, hey, if you want to find out more about Lifestyles Unlimited, check us out at lifestylesunlimited.com. Check out our free workshop. You can call us at 866-945-6565. Again, that's 866-945-6565 to register for that workshop. And if you want to donate to Peter, go to lugiveback.com. Again, this is Andy Webb. I thank you for listening today, and I look forward to talking with you again soon on the Lifestyles Unlimited Real Estate Investor Radio Show. And I think we made it clear today, it's not about the money. It's all about the lifestyle. You have a great day.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.